the $2 trillion question that divides America, and the new changes that could redefine it. Have you ever wondered why your neighbor, who makes the same income as you, might be paying thousands less in taxes? With recent tax policies reshaping America's financial landscape, things are about to get even more interesting. The Tax Cuts and Jobs Act was just the beginning. President Trump's latest announcement could completely change how you view your tax situation. Understanding the latest tax reforms that affect you. Hey there, I'm Sarah from Tax Insights Today, and today we're diving into not just one, but two major tax events that could shape your financial future. First, we'll revisit the Tax Cuts and Jobs Act of 2017, and then break down President Trump's February 6, 2025, proposed tax plan. Trust me, you'll want to stay tuned. The Tax Cuts and Jobs Act of 2017 was a $2 trillion reform that transformed how middle-class Americans handle taxes. Now, new proposals for 2025 could make even bigger waves. Whether you love or hate these changes, understanding them is key to making the most of your money. Breaking down the current and future impacts on your wallet. The positive side, so far. Let's start with what we know. The 2017 reform simplified tax filing for many Americans. The standard deduction nearly doubled, from $6,350 to $12,000 for individuals, and from $12,700 to $24,000 for married couples. Plus, the child tax credit doubled from $1,000 to $2,000 per qualifying child, meaning more savings for families. But the newly announced plan adds even more benefits. No tax on tips. This could significantly help around 4 million workers who report about $24 billion in tips annually. No tax on Social Security benefits. For over half of retirees relying on Social Security for more than 50% of their income, this change could be life-changing. No tax on overtime pay. For hourly workers, this could mean thousands of dollars in tax-free income. The drawbacks and considerations. But not everything is as rosy as it seems. Personal exemptions worth $4,050 per person were eliminated under the 2017 reforms, and the $10,000 cap on state and local tax, SALT deductions, hit high-tax states hard. While President Trump's new plan proposes doubling the SALT cap, it may not be enough relief for some. Also, consider the long-term impacts. Although the elimination of tax on overtime and tips benefits middle-class workers, these cuts aren't without cost. For instance, the plan to eliminate tax on overtime pay could cost around $67 billion, a gap the government aims to close through reduced waste, fraud prevention, and tariffs. Real numbers breaking down the impact. Let's take a look at some real-world examples. The Johnsons in Ohio, making $75,000 a year, they benefited from the 2017 tax cuts and are saving about $2,000 yearly thanks to the doubled standard deduction and child tax credit. The Martins in New Jersey. Despite earning the same income, the SALT deduction cap left them paying more due to high property taxes. However, the proposed SALT deduction adjustment could give them a break. Samantha, a waitress. With no tax on her $10,000 annual tips, she could save thousands, allowing for better financial planning. Your tax future. Here's the bottom line. Whether these tax changes are a blessing or a burden depends on your unique situation. The new proposals aim to stimulate economic growth while providing targeted relief for middle-class Americans. But remember, many current provisions expire in 2025, so staying informed is key. Want to stay ahead of these changes? Hit that subscribe button and join our Tax Insights Today community. Every week, we break down complex tax policies into actionable advice to help you navigate your financial future. Remember, understanding your taxes isn't just about numbers. It's about taking control of your financial future. Get access to our newsletter at taxinsightstoday.com. See you in the next video.